The money right here on WDBO 107.3 FM, AM 580, always streaming live inside your WDBO app. This is your chance to listen to all kinds of questions throughout the week and then write them down in your notebook because class is about to start. We're sitting here with two certified financial planners with the Certified Financial Group, and you can get your questions answered live on the air. Over 400 years experience inside those walls, and I think we just added another certified financial planner, so you're up to 179 people there giving advice. So maybe it's less than 20, but with the experience of 179, you know the Certified Financial Group is a place you can trust. You can call in today. We got Chris Toadvine and Joe Bert, part of the teams here in studio, answering your questions, as we have been known to do every Saturday. We are live right now. It is Saturday morning, July 6th at 9 a.m. If you're listening to it on a different day, we like to replay this show because there's so much juicy information. So if you're listening to it Saturday at 7 a.m. or Sunday at 7 a.m., then it is a recorded. But right now, Saturday at 9 a.m., we are live. Joe, Chris, how are you guys doing today?
Good morning, Josh.
We're doing great. We're doing great. Good to be with you. As the intro says, we've been here for more than 30 years, talking to our Central Florida listeners, talking about financial planning, retirement planning, saving for your future. It's what Chris and I and the 15 other certified financial planner professionals do day in and day out, Monday through Friday for a fee. But on Saturday morning, we are here for you absolutely free. So if you have any questions about your personal finances, things you're trying to figure out as you look down the road and you see retirement staring you in the face and realize that one day that paycheck is going to stop, and how do we continue to enjoy the lifestyle that we want or hope to have or enjoying right now, what do we need to do? So that's what Chris and I do. And Chris, as I may have mentioned in the past, is one of our two certified financial planners who also has a master's degree in financial planning. So we are loaded. You can applaud yourself. That's right.
That's right. A round of applause in the office this morning.
That's okay. So anyway, we are here this morning to take your calls. And the good news for you is the lines are absolutely wide open. So if you have any questions that are on your mind regarding your personal finances, we'd be glad to entertain them. And the topic for this morning is what, Chris?
Well, the topic for this morning is Florida's homeowner insurance crisis, what's causing it and what to do. So who knew that there was a crisis related to homeowners insurance? And the answer to that would be everyone who has homeowners insurance and who has had a renewal here in the last year or so, because as everyone I'm sure who's listening and owns a home knows, the homeowners insurance rates are skyrocketing, Joe.
Yeah.
And when I say skyrocketing, I mean more than doubling. So yours truly has a policy that is renewing effective tomorrow. So this is very timely for me.
Happy anniversary.
So, well, thank you. Yeah. Thank you. And the insurer is welcoming me also for, by the way, more than twice as much as I paid last year.
Oh, my gosh.
So, yeah. And that's consistent with what I have been hearing from clients for the last year or so. So I knew it was coming, and I just braced myself, and now it's here for us. But everyone's going through this. So the big question is really what's going on. And so I did a little homework. I didn't really know what was going on. I had heard a presentation last year. It was pretty timely from a lady who was with the Office of Insurance Regulation, and she talked about some of the causes. But I thought a good place to start would be my renewal policy, the new company, which is Slide. I was with Farmers. I switched to Farmers to save money and enjoyed 2 years of lower premium.
I like their commercials.
But yeah, they're cool commercials while they lasted. but nonetheless, they informed us about a month after we renewed last year that they were going to be pulling out of Florida and they would not renew us. So they and other insurers who have decided to pull out of Florida have switched large blocks of policies to Slide, and that's
Slide.
who I slid right over to Slide. Yeah,
sliding around. Okay, so tell us about that.
Here's what Slide says the cause of the increased premium. They said there's an increased risk. So from 05 to 15, there were no hurricanes that made landfall in Florida. However, since 2016, the state has been hit by several large hurricanes. So that's one cause, increased risks. Hurricane Ian and Irma and were two of the costliest storms in Florida history. And then inflation, Joe. We've seen this with clients, right?
Just the replacement cost.
The replacement cost alone, and that's legitimate, right? I mean, bricks cost more, shingles cost more.
Labor.
Labor costs more. Everything costs more.
Yep.
So we get that. And then the cost of reinsurance. So I was telling my wife last night, she said, what's your topic? And we were talking about that, and I said something about reinsurance, and she, like many people, probably, she didn't know, and many people probably don't know, that oftentimes insurers, whoever your insurance company is, goes out to other companies and buys insurance. So the insurance companies buy insurance. They reinsure some of the risk. So in other words, they don't bear that risk alone.
Right.
And the cost of that reinsurance has gone up tremendously.
And one of the biggest reinsurance companies in the world is
Berkshire Hathaway.
And Lloyd's of London.
Yeah. And they write direct too. But so here's what Slide has to say about the cost of reinsurance. Specialized coverage ensures adequate funds are available. Covered losses should be widespread in the event that Florida has another costly hurricane due to increased weather risks and litigation costs in Florida.
Oh.
Okay, now we're starting to get somewhere. Okay, so this is really the essence and the catalyst that has caused premium rates to go up so much. So we can keep going with our topic. I see we have a caller, so I don't want to keep Bob waiting.
Let's get to Bob. Bob, we don't want to keep you on the line. Thank you for your call. Good morning. How can we help you?
Hi. Question about RMDs. In a couple of years, I'll have to take my first one. And can you take just a lump sum at the beginning of the year, end of the year, spread them out? Does it matter to the IRS how you take it, as long as you take it by, I guess, the end of the year?
Well, go ahead,
Bob. You know what? That's a great question, and you're got to start this in a couple of years. You said so. You're really planning ahead, and we like that. We like planning today. So, but nonetheless, the short answer to your question is that you can, as long as you take it that year, you can take it however you want. You could take $3 a day. You could take you could take it monthly. You could take it in a lump sum. But the main thing is that you take it. Now, the question and the opportunity for you is, hey, maybe you could give some of that as a qualified charitable distribution, perhaps, to get your tax bill down. So there are other things you can do from a planning standpoint that might be worth considering, Bob. But the short answer is you can take it as a lump sum. You can spread it out. It really doesn't matter as long as you get it out that year.
And that first year, though, Bob, you can defer it until April 1st of the year following the year in which you turn age 73. So if you miss that December 31st deadline, they kind of give you a little leeway. It's not April 15th, it's April 1st. And you have to take it out for that year, and then, of course, you'd have to take another one that year. So that's...
Yes, I understand that, and that would really make the taxes even worse than they're going to be anyway.
Mm-hmm. Yep.
Okay, well, thanks very much.
You're quite welcome, and those are the rules.
Calling, Bob. Those are the rules. Yeah. So,
and then after Secure Point 2.0, there's all kind of new rules. That, in fact, we're going to have a workshop on that this coming Saturday. We'll get into the workshop about that. But Secure 2.0 has changed the rules about when you have to take it out, how much you have to take out, and who can stretch it and who cannot stretch it. But get back to your topic about insurance.
Secure 2.0 had something like 90-something provisions, so we're still unpacking those. But so back to the topic, and thanks for your call, Bob. But the homeowners insurance crisis. So we talked about inflation and labor and materials prices going up and the risk of costly storms. But really, the thing from my research, Joe, that has really caused the crisis, if you will, and is causing companies to pull out of Florida and leaving us with few options, is the fact that there were so many fraudulent roofing claims back in the day. Yep. So I've got some interesting stats on that. So you think about it nationwide, there are 50 states, right? 50 states. So if every state filed claims equally, each state would file 2% of the total claims. Mm-hmm. Well, Florida has 9%. Right, 9%.
What does that tell you?
Well, what it tells you is that, a lot happens down here, right? Florida, right? So, nonetheless, there are, hurricanes and things. We are one of the larger states in terms of claims, but here's one for you. We have 79% of the home insurance lawsuits, 9% of the claims. 79% of the national homeowner insurance lawsuits are in Florida.
Wow.
Think about that.
I don't want to think about it, but that's the big driver.
That's the big driver. Yep. That is the big driver. And so I think it was the 10-year period ending in 2021, Joe, $51 billion, with a B, was paid out by Florida insurers. And about 71% of that money So 7 out of every $10 that was paid out went to attorneys' fees and public adjusters.
Oh my gosh.
Yeah. So, there you go. That's and that is really.
And you can't blame the insurance companies for pulling out.
You can't blame them. They're losing money.
Yeah.
They're losing money, and so
we end up paying for it for you just to stay insured.
So everyone else is paying for it, and I will confess to being a little disheartened over the issue prior to kind of digging into it. But what I've learned is that Florida has actually done quite a bit. In the last couple of years, they've done quite a bit, and this a lot of these issues go back to 1992, Hurricane Andrew, and you may know this, Joe. I did not know this. As a result of Andrew, which was a 100-year storm, and
Southeast Florida,
the damages were $26.5 billion back then.
Wow.
I did the math; that would be about $55 billion today. So, very costly storm. But as a result of that, the legislature created 3 different entities. Okay, one was the Residential Property and Casualty Underwriting Association, the Windstorm Underwriting Association, and the third, which is still in existence today, is the Florida Hurricane Catastrophe Fund. So keep that in mind.
Okay.
Now, the first 2, the PNC Underwriting and the Windstorm Underwriting, were combined about 10 years later, so that would be around 2002. They were combined to create what we know today as Citizens Insurance, right? So they created Citizens Insurance. So that third fund still exists today, and every policyholder in Florida, a portion of their premium goes to that fund, to contribute to that fund. And that fund acts as, what did we say up top? Reinsurance.
It's kind of a backstop.
So that's what slide says. Hey, the reinsurance costs have gone up. And so this is one of the forms of reinsurance. So Citizens also offers reinsurance, and I think we're up on a break, so there's a lot more we can talk about on this one, Joe. But we just started to get into the juicy portion of it.
We'll do it.
All right. So
thank you so much. We got Chris Toadvine and Joe Bert, couple of certified financial planners with the Certified Financial Group. If you want to join the conversation, the number to call is 844-580-9326, 844-580-WDBO, or feel free to send in your open mic using that free WDBO app. Open up that app, push the open mic button down at the bottom. Give me your best 15, 20 seconds, and then I'll translate. I won't translate. I won't know what you're saying probably, but we had to know a couple of experts by the name of Chris Toadvine and Joe Bert with the Certified Financial Group who can answer your question as only the people of Certified Financial Group can. You're listening to On the Money, where we are planning tomorrow
Today
with the Certified Financial Group.
For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the 3rd or 4th generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, but we're planning tomorrow, today. Our fiduciary approach of providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town.
I've sent several of my teacher friends here.
We're Certified Financial Group, but we're planning tomorrow, today. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries, and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the 3rd or 4th generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, but we're planning tomorrow, today. Black Monday, the dot-com bust, 9/11, and now 2 wars. We've pretty much seen it all. Acting as fiduciaries, our CFP professionals have been a steady hand guiding our clients to and through their retirement years.
No reason to be worried about anything.
Stay the course. You stay the course, and you get there.
I don't have to worry about it like I know a lot of people look at it every day. I don't have to do that with the team here at Certified Financial Group.
We're Certified Financial Group, where we're planning tomorrow, today. Are you tired of trying to reach your advisor through a call center and being put on hold for 20 minutes? That's why we don't use one, and our clients seem to appreciate the personal touch.
They always answer my questions and really care about what's going on with me.
You can trust what they say, and they do what they say, and it gives you a comfort feeling it's hard to find in the world today.
Waiting for you to call almost. You almost feel like that.
We're Certified Financial Group, where we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
Two on the money here on WDBO 107.3 FM AM 580, always streaming inside your WDBO app. My name is Josh McCarthy, joined today with Chris Toadvine, certified financial planner with the Certified Financial Group, sitting next to Joe Bert, another certified financial planner with the Certified Financial Group. So between the three of us, there's two certified financial planners and some guy who answers phones. But that's what I'm doing here today, answering your questions. If you want to call in to help plan to and through your retirement, or any questions you may have heard in the news about the financial world, we got experts standing by to answer your questions. 844-580-9326. 844-580-WDBO, or you can send in your open mic using the free WDBO app. Chris, Joe, let's keep it rolling.
Let's keep it rolling. All right. So we were talking about homeowners insurance and the reasons and causes that it went up. And, in short, inflation, labor and materials have gone up. And we've had some pretty expensive storms of late. And so the insurers are aware of that and on top of that. But the big thing really that has driven it is insurers have pulled out of Florida, Joe. And so,
smaller market.
And what happened is after Hurricane Andrew, apparently the legislature allowed companies to, instead of spreading the risk around across their nationwide pool of homeowners, they allowed them to open companies that were Florida specific.
Right.
And so, whenever you have a smaller pool, what happens to premiums?
Go up.
They go up.
Yep.
They go up. So no different than life insurance, any other kind of insurance. The bigger the pool, the more people you spread it across, typically the lower the premium. And so, that too has been a problem. And so, consequently, rates have gone up quite a bit. Many companies have pulled out. I saw that over the past 3 years, more than 30 providers have in some way either pulled out or changed their coverage, so they're not renewing in many cases. Like I saw AAA, for example, they are non-renewing. Anyone who has their umbrella, their auto, and their homeowners bundled, they're not renewing them. And so,
Wow.
there are those kind of changes for those companies that aren't pulling out. Oftentimes they're making changes. So, the big thing is, what can you do about it? And this is something, Joe, we were talking about, and I guess this was in the Tampa Bay Times there, but the MySafe Florida Home Grant's available. We wanted to make our listeners aware of that. This is a program that the state of Florida has started to give homeowners up to $10,000 to harden their homes against storms.
All right.
That's
We'll
one of
talk
the
about
things you
harden
can
your
do.
homes. What does that mean?
Well, what does that mean? That means basically prepare for hurricane force winds, and so make sure your trees are trimmed would be one thing. Windows and doors. I don't think the MySafe Florida Home Grants cover trimming trees. I don't think,
But it does. If you need new windows, doors, roof hardening, roof securing, that kind of stuff, garage doors,
Yes.
those kind of things that are susceptible to hurricane damage, you can get up to $10,000 if you qualify. Now, it's based on your age and your income level and the value of the home.
Yes.
So, but that's an extra $200 million that the legislature has approved, but it's going fast, I understand.
It's going fast. I actually went on that site yesterday, Joe, just out of curiosity, because we had coincidentally sent an email to our clients about this program, and the website for those listening is mysafeflhome.com. So that's mysafeflhome.com. And you can review the eligibility criteria there and figure out whether you qualify or not, and then register if you do. But when I went on there yesterday, it seemed like the website was not accepting new applications at the moment.
Well, maybe for that age criteria.
And-
I don't know how that works.
Well, I don't either, but it just
Okay.
says so. I would
Just keep
encourage
checking.
listeners to go there.
Yep.
And there is, it's the calendar staggered based on your income level and things, and so it started July 1st through 15th is the first window.
Up to $10,000, and they will match $1 for every 2 that you put in. So if you invest 20, you get an extra 10, so you can get $30,000 worth of home improvements.
There you go.
Right.
That's a
the
pretty good deal.
Thank you so much. If
Free
you want to
money.
join the conversation, sorry, go ahead. Were you guys had something else to say?
No, that's good, Josh. I was just
All
saying
right.
free money. So you
Then
want
I'll
to take
just-
it like a match on your 401k. You want to take advantage of it.
And if you are a good match for this radio show, you got a question for Chris or Joe with the Certified Financial Group, I invite you to call in now, 844-580-9326, 844-580-WDBO. Send in your open mic using that free WDBO app. You're listening to On the Money, where we're planning tomorrow
Today.
with the Certified Financial Group.
So you guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in and you say, hey, Lou, I'm barbecuing this weekend, right? What do you like? And Lou goes to the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, veal? Oh, I like veal. Well, what do you got on skirt steak? Oh, we got some great skirt steak. Just came in yesterday from Montana. Skirt steak is one of my favorite, marinated up a little bit. It's fantastic. Lou will never say to you, Elliot, it's a little long on the meat here, big guy. Your cholesterol is getting high. Why don't you go down to the fishmonger a couple blocks and have a nice piece of salmon? right? He'll never do that. Why? His job is to sell me meat, and I go in, actually the same way I go into the Toyota dealership, because I like Toyotas, and I trust the salesman to sell me a good product if I trust him. And the fact that he's got my interest at heart vis-a-vis my expectations for selling me that thing. By the same token, when I go to see a dietitian, I know she's going to look at all of my labs, she's going to take all the measurements, she's going to run all of her analysis, and she's going to absolutely give me her best thinking on what's best for me. Whether she's a vegetarian or a meat lover, likes this, likes that, if she thinks I should be doing something differently, even if it's not good for her, she's going to give me an opinion that's for my interest. So what's the difference between a fiduciary and the brokers? Well, these are dietitians, these are butchers. It's that simple. Brokers are butchers selling product. Fiduciaries are dietitians looking after your health. The problem is most people think that their butcher is a dietitian. So when one of your moms or dads or friends calls the broker and says, you know, I got 200 grand, I sold a little piece of property, or I got some inheritance, what should I do with it? They're going in thinking they're talking to a dietitian, and they're really talking to Lou the butcher.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today.
40 years ago, I had a dream of building the best personal financial consulting firm in Central Florida. Now, with 14 certified financial planners acting as fiduciaries, I believe we're there. But don't take my word for it.
As we approach retirement, we have the freedom of choice.
Peace of mind that we now have. That's everything to us.
The people that work here are honest and caring, and I feel like I can go to sleep at night.
So schedule your no-obligation visit today at financialgroup.com, where we're planning tomorrow, today. For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, where we're planning tomorrow, today. Our fiduciary approach of providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town.
I've sent several of my teacher friends here.
We're Certified Financial Group, where we're planning tomorrow, today. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, where we're planning tomorrow, today. Black Monday, the dot-com bust, 9/11, and now 2 wars. We've pretty much seen it all. Acting as fiduciaries, our CFP professionals have been a steady hand guiding our clients to and through their retirement years.
No reason to be worried about anything.
Stay the course. You stay the course, and you get there.
I don't have to worry about it like I know a lot of people look at it every day. I don't have to do that with the team here at Certified Financial Group.
We're Certified Financial Group, where we're planning tomorrow, today.
Welcome back to On the Money here on WDBO 107.3 FM AM 580. Always streaming inside that WDBO app. My name is Josh McCarthy, sitting here today with Chris Toadvine and Joe Bert of the Certified Financial Group. If you were listening in the first hour and you're like, you know what? I do got a question, but it's kind of specific. I don't want to get into the nitty-gritty of my personal finances live on the air. Well, good thing that Joe has planned for that. He's got Rodney Ownby standing by taking your calls off the air, and that number is the office for Certified Financial Group. So write down 407-869-9800, 407-869-9800. If you got a drive-by question or you want to kind of just put your foot in the water of the world of financial advice along with radio, you can call right now live on the air, 844-580-9326, 844-580-WDBO, or send in your open mic using the free WDBO app. And Joe, you said you wanted to kind of clear something up, you said, in the first half hour today.
Yes, I did. I misspoke. And my friend here, Chris Toadvine, who has the master's degree, corrected me on the error that I made. I have some bad news and I have some good news. The bad news is I said this program you can get up to $30,000. You invest 20, your state's going to give you 10. I was wrong. It's even better. You invest $1, the state's going to give you 2. So if you invest 5, they're going to give you 10. So up to $15,000 worth of improvements. So once again, if you invest $5,000 in new windows, doors, garage doors, whatever it might be to improve your house for hurricanes, you invest 5, the state will give you 10, so you can get up to $15,000 there toward that project. And I want to correct that.
There you go. That's it. Well, but wait, there's more.
Tell me.
No, I'm just kidding. There's, that's pretty good though, Joe.
That's great. Maybe that's why it's selling out fast.
Well, that's probably so. Think about that. You put 5,000 in, and you get up to 15,000. So
let's give that.
Again, this program
website
for those listening. This program is called My Safe Florida Home Program, and the website is mysafeflhome.com. So one more time, mysafeflhome.com, and you can go there and review the eligibility criteria to determine if you qualify. And they are giving, Joe, I believe, preferential treatment to
elderly,
to retirees. I don't like to say elderly because I don't know what that means really, but to retirees and lower income folks kind of get to the front of the line, and so that's pretty cool too. And they will do wind mitigation inspections, grants for improvements, insurance premium discounts. So, it's a great program.
Yep.
And I just learned about it this week.
There you go. All our clients learned about it earlier because we sent out the communique that we do to keep all of our clients informed. We just got a Facebook question regarding insurance. You want to read it there, Chris?
Yeah, I'll be glad to. So Michelle asks us, she says, I don't understand all that my homeowner's insurance covers. Can I get some advice as to how to understand my coverage and the questions that I should ask the company if I don't have flood insurance, should we get it? So lots of questions in there, Michelle, and that's it's a good question, and I think you're not alone. I find that auto and homeowners insurance, Joe, are often two of the most misunderstood.
And probably most people don't know that's part of the CFP requirements. When we took our CFP courses, we had to understand, or at least pass the test regarding homeowners and automobile insurance. Yeah, but there's a lot of nuances, if you will, to homeowners insurance.
There are a lot of nuances to it, and so how to understand your coverage and some of the questions. Here's what I would encourage you to do, Michelle. So let's start with your first question: how to understand your coverage, and what questions should you ask the company. So first of all, you want to find your policy wherever it's at and get the declarations page. Okay, there's lots of legalese in most insurance contracts, but generally up at the front of your policy is what's known as a declarations page, and that declarations page is going to summarize the let's say features and benefits that you have. Okay, and so one of the big ones is how much is your home insured for? And Joe, I don't know what your thought is, but I tend to steer my clients towards about 80% of the value of their home. The dirt beneath your home has some value. But if your home, God forbid, gets hit by a storm or tornado or fire or whatever it is, and there's nothing left and you have to rebuild it, what would that cost?
Right. And you want to insure for what's called full replacement cost.
Yes. And what is that, Joe?
Well, that means that that's what it costs to replace it. Yeah. A lot of people think that, unfortunately, if you don't keep up with it, the value goes down, and you find out your home was worth $500,000 or cost $500,000 to repair it, but you're only covered for $400,000. You have to make up the difference.
That's right. So as we talked about, one of the drivers for insurance premiums going up is inflation. So guess what? If you have to rebuild your home, it's going to cost you more. Right. So you want to check that. That's one of the things, when you say, what question should I ask the company, or really your agent, unless you're dealing direct with the company, oftentimes there's an agent. And so, and it wouldn't be out of bounds at all, Michelle, to ask them to walk you through the coverages that you have. Now, another big thing is your liability protection, right? So if you get sued, somebody comes to your house and slips in the kitchen, hits their head.
Drowns in the pool, God forbid.
Yeah, or God forbid, something horrible happens, and they sue you. The liability coverage is what is going to be available to protect you, okay? And so oftentimes I see folks not understanding that, and so they get, $100,000. Or, Joe, did you know Citizens will only offer $100,000 of liability coverage?
That's it?
That's the most. That's the most. So that's not enough, really, in my opinion, for most people.
Thinking about that, that's really the biggest target, or the easiest target for attorneys, is the liability coverage. You don't have to prove much. You just go
after
file the paperwork up to $100,000, bingo. It's done.
But on the flip side, for you, Michelle, and for our listeners out there, for all of us, that is some of the cheapest protection you can get. So to increase that to $250,000 or $500,000, or maybe even more, depending on your situation, is generally a good idea. So that's something you definitely want to look at, and that's also true with your auto policy.
So let's talk about auto and umbrella policies and what that means.
Well,
what's an umbrella policy? I'm not insuring my umbrella.
An umbrella policy picks up where your auto and homeowners leaves off.
Right.
And so it provides additional liability protection. And for some people, and I think, this is where I have this conversation with my clients, Joe, and if someone is retired and all of their assets are in retirement accounts and their home, if they get sued and there's a judgment against them, guess what? In Florida, we have constitutional protection for those types of retirement accounts and life insurance, cash value, and annuities, and your primary residence, not a second home, but your primary residence up to some limits. And so for someone in that circumstance, we would say, hey, is it really worth the cost of an umbrella? But hey, if you have someone who's in a high risk occupation, let's say an OBGYN, delivering babies every day, and the odds of them getting sued is high, in addition to the coverage they might have through their employment, that's where you pick up an umbrella policy.
Well, you talked about high-risk occupations. You don't necessarily have to be in a high-risk occupation today, but just living in the state of Florida, with the litigious society that we're in, everybody's suing everybody for everything. And I had, unfortunately, over the last couple of years, I've had two clients who, fortunately, we recommended they have excess liability policy. Mm-hmm. One lady was pulling out of her driveway, backing out. Some maniac tearing around the corner on a motorcycle, rammed into her, got sued, and the saga continues. But fortunately, she had the excess liability policy.
Pulling out of her own driveway.
So you never know when that circumstance is going to, and you'll always be blamed. Everybody blames everybody for everything, and you want to have that coverage. And, that's why they have all those commercials, because they want to let you know that they're available to extract those dollars for you. Not only in homeowners, as you talked about, but certainly in your automobile coverage.
Well, that's exactly right. No, I had a similar thing with a client who pulled up to a stop sign, and someone ran their bike into the front of the car and rolled over the hood, and the cigarette never came out of the guy's mouth. But guess what? He sued, and State Farm wrote a check.
Yep.
And so, this is what drives all of our premiums up. Mm-hmm. But nonetheless, so yeah, Michelle, those are some of the things you want to think about. Other facets of your homeowner's policy would be, for example, if your home is destroyed and you have to live somewhere else for the year that it takes to rebuild it. Right. That's part of the coverage. The contents of your home, right? That's part of the coverage. And, sometimes you'll see that up to, say, 50%, depending on what you have on the inside, or, it's some percentage or dollar amount. So you would want to be sure that that's adequate. A lot of times you can add things for water damage, those types of things, or if you have jewelry, there are things that you I'll say riders that you would add to the policy. But and then you ask about flood insurance. Something else I learned, Joe, is that all Citizens policyholders are going to be required to get flood insurance. Wow.
Regardless of where you live.
Regardless of where you live.
Wow.
And this one of my clients told me about it, and they live over on the west coast of Florida. And I mean, they're not on the coast. They're inland a bit.
Well, that's just I don't want to say sneaky way, but a subtle way to increase their premium revenue, because some people will never be in a floodplain.
Well, I don't know that Citizens offers that. So you know what I think? I think it's a sneaky way to pass it on to the feds, because who writes flood insurance?
I thought that was going to, they required. Okay, now I understand.
So think about that.
That's why you have the master's degree. I got it.
Well, no, who knows?
Thank you for clearing that. Yeah,
you're
right.
Follow
Because
the money trail.
It is federally insured flood insurance. I should know that because they have the policy.
Yeah. So there you go. But as far as you not having flood insurance and should you get it, Michelle, it's a good question. I think it depends on where you live. I mean, and where I live personally, we're high and dry, and I have no concerns. And we had this bad storm last year, and there was just no water in sight for us. So I think it's one of those things you want to make an informed decision, because I will tell you, with insurance, a lot of times folks they want to just try to get it as cheaply as they can, Joe, and that works until it doesn't.
Right.
And if you have one big event, and let's say a flood, for example, which a flood for insurance purposes is water coming up from the ground, right? So it's not top down if your roof comes off and you get water in through the ceiling, but it's really if it's coming up from the ground. So look, if you're in an area, and a lot of folks last year realized that hey, I'm in an area that's prone to flooding, and I didn't know it. We're in the 100-year floodplain.
Now you know.
Now you know.
Yep.
So, but
All
I think
right,
we're
Josh.
up on a break. Josh, take it away.
You got it. Take and run. It's 844-580-9326 is the number to call if you want to join the conversation. Got a question for your financial future? Chris Toadvine, Joe Bert with the Certified Financial Group answering your questions live. 844-580-WDBO or sending your open mic using that free WDBO app. Want to remind you that Rodney Ownby is standing by off the air, taking your calls if you want to get straight to the heart of the office of Certified Financial Group. Give Rodney a call. Tell him Josh sent you. That number is 407-869-9800. 407-869-9800. You're listening to On the Money, where we're planning tomorrow
Today
with the Certified Financial Group.
Are you tired of trying to reach your advisor through a call center and being put on hold for 20 minutes? That's why we don't use one, and our clients seem to appreciate the personal touch.
They always answer my questions and really care about what's going on with me.
You can trust what they say, and they do what they say, and it gives you a comfort feeling it's hard to find in the world today.
Waiting for you to call almost. You almost feel like that.
We're Certified Financial Group, where we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
So you guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in and you say, hey, Lou, I'm barbecuing this weekend, right? What do you like? And Lou goes to the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, veal? Oh, I like veal. Well, what do you got on skirt steak? Oh, we got some great skirt steak. Just came in yesterday from Montana. Skirt steak is one of my favorite. Marinated up a little bit. It's fantastic. Lou will never say to you, Elliot, it's a little long on the meat here, big guy. Your cholesterol is getting high. Why don't you go down to the fishmonger a couple blocks and have a nice piece of salmon? Right? He'll never do that. Why? His job is to sell me meat, and I go in, actually the same way I go into the Toyota dealership, because I like Toyotas, and I trust the salesman to sell me a good product if I trust him. And the fact that he's got my interest at heart vis-a-vis my expectations for selling me that thing. By the same token, when I go to see a dietitian, I know she's going to look at all of my labs, she's going to take all the measurements, she's going to run all of her analysis, and she's going to absolutely give me her best thinking on what's best for me. Whether she's a vegetarian or a meat lover, likes this, likes that, if she thinks I should be doing something differently, even if it's not good for her, she's going to give me an opinion that's for my interest. So what's the difference between a fiduciary and the brokers? Well, these are dietitians, these are butchers. It's that simple. Brokers are butchers selling product. Fiduciaries are dietitians looking after your health. The problem is most people think that their butcher is a dietitian. So when one of your moms or dads or friends calls the broker and says, I got $200,000, I sold a little piece of property, or I got some inheritance, what should I do with it? They're going in thinking they're talking to a dietitian, and they're really talking to Lou the butcher.
Welcome back to On the Money here on WDBO 107.3 FM, AM 580, always streaming live inside your WDBO app. My name is Josh McCarthy, sitting here with some certified financial planners with the Certified Financial Group, Chris Toadvine and Joe Bert, answering your questions live this Saturday morning. If you want to pick up the phone right now, Rodney Ownby is standing by off the air to answer any lingering questions you may have as this episode comes to an end. That number is 407-869-9800, 407-869-9800. He is sitting inside that office right now, and if you want to swing by the office yourself, there's some opportunities for that as well.
There is. Next Saturday from 10 to 11:30, Matt Murphy, Certified Financial Planner, will be doing a workshop on retirement planning through the 4 stages of retirement, or tax planning through the 4 stages of retirement. And we encourage you to come on by. It's, as we alluded to earlier in the program, Secure Act 2.0 changed the rules regarding IRAs and 401ks, when you can take the money, when you have to take the money, who should get the money, the best way to do it, and all that kind of stuff. Matt will be covering that in detail next Saturday morning at our office here from 10 to 11:30, but you do need to make a reservation, and you can do that very easily by going online to financialgroup.com, click on events, and you can reserve your seats right there. He'll provide some refreshments, and I guarantee you will walk away with information that could potentially save you thousands of dollars. So it could be worth an hour and a half of your time next Saturday morning, and our office is up here in Altamont Springs, just south of 434 and just west of I-4.
Sounds good. Then the next one we have, Josh, is July 27th. Gary Abley is hosting tax-efficient investing and distribution strategies. So a couple tax-oriented workshops here for the month of July. And then finally, on the 17th of August, Matt will be back talking about savvy IRA planning for boomers. So again, how to help you save taxes and get more out of your IRA. So we have a number of workshops coming up here over the next 5 weeks or so, and you can learn more about those at financialgroup.com. Again, financialgroup.com, and make reservations there also. So,
and why don't we tell our listeners about Score My Funds, because it's been very popular in recent weeks, and some of our newer listeners have learned about it.
Yeah,
it's an opportunity for you to get a objective look at the investments that you might have in your 401k, your IRA, or your individual brokerage account, whether they be mutual funds or ETFs, not individual stocks, but mutual funds and ETFs. We'll run them through our screener, if you will, created by the Center for Fiduciary Studies. It grades all those investments on 11 distinct criteria to grade them everything from manager tenure to expenses to performance to how much return you're getting for the risk that you're taking. It is absolutely free. We'll send you a detailed report within 48 hours. All you need to do is go to scoremyfunds.com. One word, kind of, scoremyfunds.com. Put in your ticker symbol. If you don't know the ticker symbol, put in the fund name. It'll give you the ticker, and we will send you that report absolutely free. So a lot of folks have taken advantage of that, and they thought they had great funds, but when you pull back the cover, you really realize that maybe what you have is a clunker. And we'll rate it versus all of its peers. So we're looking at large cap versus large cap, international versus international, bond funds versus bond funds, and you get an idea. Then if you want to follow up, we, of course, give you an opportunity to have a no-obligation visit to visit with Chris or me or one of the other 15 certified financial planners here at Certified Financial Group, where we do retirement planning and investment planning for a fee on Monday through Friday, and on Saturday mornings, and the replay on Sunday mornings, where it's our pleasure to be with you absolutely free. So that's what we're all about.
There you go.
Thank you so much again, Rodney Ownby. Oh, did you have one more thing to say, Chris?
I did not, Josh. We appreciate your good help this morning.
Thank you, and I appreciate the expert advice you guys dish out every single Saturday morning live. If you want to talk to Rodney Ownby, got any more questions you want to sneak in before they wrap up today, the number to call is 407-869-9800, 407-869-9800. You just listen to On the Money, where we're helping you plan tomorrow
today
with the Certified